Bitcoin had a small pullback yesterday, basically flat on the day. Now, I don't mind this. Why? Why is this price action actually okay for Bitcoin? Because if you look at your pattern formation, what type of pattern is this potentially forming right now? It broke above here, above this downsloping trend line, right? It actually confirmed, and now it's consolidating. As long as it doesn't break below this trend line again, it's actually bullish consolidation that should eventually yield a move to the upside. Now, again, your upside short-term resistance is going to be this high and this high, which is around 88,500. If it can get through that, you're looking at 92. Now, at 92 is going to be like a brick wall. Like, in fact, the Great Wall of China, I mean, that's how big of a resistance it should be at that level. It should really stop price. And I actually think Bitcoin could end up turning back down at that point and falling even more. But needless to say, short term, if you're a shorter term trader, the price action right now on Bitcoin is on the bullish side.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down the latest US-China trade war escalation and its impact on crypto and Bitcoin. He discusses how these tensions are influencing market dynamics and investor sentiment. Tune in to gain insights into navigating this volatile landscape.
The dollar today, ever so slightly lower. Now, what's interesting here is on the US dollar. So number one, we've broken this trend line, right? So this trend line has been broken. Number two, this is starting to look like bearish consolidation, right? We know the bear flag is the inverse of a bull flag. A bear flag is a sharp move down with kind of inside bar consolidation, right? And what's the probability of that pattern? It's another move to the downside. So listen, I'm still always in the camp that there's a chance that you could see a retrace to the scene of the crime, maybe up here. But one thing I do know is we've confirmed below this trend line. When you confirm, so you closed below, and then the next candle closed below that low right there. That's confirmation, meaning that it's unlikely it's a fake out by institutions just to grab people's money on that trade, right? So what that means is if you retrace back to the scene of the crime, which is that trend line, it generally has about a 70 to 80% chance of being rejected and us making lows. Now, we may not get up there. Maybe we're just going to go sideways and roll over. But my point is that probability continues to be bearish on the dollar, even if we float back up into that level. The 10-year yield, this is a new trend line. For some reason, I had a stupid trend line here, and it actually pushed below. And I said, you know what? That doesn't make sense. Why did it push below? And then I'm like, duh, connect the high here to the high here to the high here, and look at that. That's the trend line to watch right now on the 10-year yield. Notice 10-year yields are basically flat on the day, but they are off their lows. Remember, if the 10-year yield begins to climb up, all right, so let's say we start to rally up on this, trade war where, again, other countries, specifically China, maybe dumps treasuries, which pushes yields up. Well, then the stock market goes in the opposite direction. The stock market trades to the downside. So watch the 10-year yield really carefully. The other thing to note here, too, is this, guys, is that just like we were talking about how the dollar broke to the downside and confirmed, ask yourself, did we confirm a breakout on the 10-year yield? And the answer is yes, we did. Here's your close above, and here's your confirming candle. So that means this is going to be major support and has a favorability for yields trading back to the upside. All right, so little tidbits like that. Flipping over NVIDIA, you can see when that news hit yesterday after hours, look at the drop on NVIDIA. We then kind of had that bounce back. We saw the markets bouncing back overnight, and then down we go again. We're trading just off of the lows. Now, flipping to the daily chart here, what do we have here? So again, NVIDIA is trading around 105 to 104. I only have a level if we get back below 100 for a day trade today, and then there's a gap fill at around 96.35. So again, suffice it to say, if I'm going to be a buyer of NVIDIA today as a day trade in the live day trading room, I need it to get down at least to 100 before I stick my neck out. That would be my first level of interest.
Bitcoin's price has slipped over 2.5% in the last 24 hours, falling to around $83,400 as market sentiment cools. One major reason behind this drop is the return of negative flows into spot Bitcoin ETF, which once fueled institutional demand. Investors are pulling out nearly $1 billion from these funds, signaling reduced confidence among big players. Without fresh capital entering the market, there's less buying pressure to support Bitcoin's price. Adding to the pressure, Bitcoin is also facing technical hurdles. It recently failed to break above key resistance levels, with both the 50-day and 200-day moving averages acting as barriers. The $80,000 mark is now a crucial psychological support level. If it breaks, the price could slip further towards $74,400. Trade tensions, especially between the US and China, are creating additional uncertainty. Large investors, or whales, are also stepping back, accumulating fewer coins. Without strong bullish momentum, Bitcoin remains vulnerable to further declines.
Oil. We know oil has broken down. It is continuing to just consolidate. Remember the pattern formation, down move, and then essentially sideways chop, right? So you're looking at basically what we would call a upside down flag or wedge pattern here. And again, most times, 7 out of 10 or so times, this pattern resolves itself by making a move lower. Now, again, just like with the US dollar, could it go up to the scene of the crime before that rejection? Yes, it could, and there's always that possibility. But just be aware, overall, this pattern is a bearish pattern. Now, how would the bearish pattern flip to a bullish pattern? If it were to recapture this and confirm above it again, and then start to consolidate, that would actually be bullish consolidation.
Tensions between the US and China are heating up again, and global markets are feeling the heat. The White House has threatened Beijing with a dramatic increase in tariffs, raising the total from 145% to a staggering 245%. This move comes just days after Trump launched a national security investigation into America's dependency on imported critical minerals, including lithium, cobalt, and rare earth metals used in everything from smartphones to military equipment. It's clear the administration is targeting China head-on, despite recent signs of Chinese economic strength. China responded swiftly, warning that such aggressive policies would hurt not just its own industries, but the entire global economy. A top official, Sheng Liuyun, criticized the tariffs as trade bullying, saying they violate international law and disrupt global order. The message was unmistakable. This isn't just a bilateral issue, it's a risk to the whole world. Financial markets reacted immediately. Gold surged past $3,300 per ounce, reaching a fresh all-time high as investors sought safety. Stocks weren't so lucky. U.S. futures slipped across the board, with tech stocks leading the losses. The Dow dropped 1%, the S&P 500 lost 1.4%, and the Nasdaq fell over 2%. Meanwhile, Bitcoin played it cool. The cryptocurrency had already dipped from $86,500 to $83,000 before the announcement, but since the tariff threat was made public, its price has remained stable. As of now, it's hovering near $84,000. Whether Bitcoin is becoming a safe haven or simply avoiding the noise remains to be seen. But for now, it's holding steady while the rest of the market wobbles. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.